On All About Stocks this week, the markets are in correction mode after hitting all-time highs during Diwali. We'll tell you what your investment strategy should be. Well, Gaurang Shah has made a profit of 10% in only 11 months. We're going to tell you how he did it. And we'll also tell you why you should be investing in Bharti Airtel and Tata Global Beverages right now. Welcome to All About Stocks. This is a show specifically meant for long-term retail investors, and long-term here is no less than 4 years. Now this Diwali we saw our markets hit those all-time highs, and over the last week we saw them correct by about 2%. Over the next half hour we'll tell you what your investment strategy should be and how you can continue to make money this year. We focus on capital goods as well, and we find out what's going on with BHEL and if you should continue to hold that stock. Remember, if you have any questions about your stocks, feel free to send it to us. Email ID is at the bottom of your screen. Joining us today, Gaurang Shah, Assistant Vice President at BNP Paribas. Gaurang, it's always such a pleasure to have you on the show, and it's specifically a pleasure this week because of how your portfolio is doing. And I want to start by looking at your portfolio because it's doing so well. And it's an illustration really of everything we've been saying on the show for the last 2.5 years, that if you stick with something for long enough, it will start to show results. So for those of you who are not familiar with Gaurang's portfolio, I'm going to take you through it. It's have an overall gain of nearly 10%. It was at 15% last week. It's corrected about 5% since then. Compare that to the Nifty. Now, from the 14th of December, the Nifty has given a return of about 4%. So we've beaten the Nifty very handsomely with this portfolio. I'm going to take you through the list of stocks. There's IndusInd Bank, Cipla, Godrej Consumer Products, Havells, M&M, Bocard, Mindtree, Apollo Hospitals, IRB Infra and Kane India. Well, Gaurang, thank you so much for a wonderful portfolio that's done so well. Your top gainer right now, Mindtree, is up almost 100% since you invested in it. Would you like to book some profits on that stock, or do you think there's more to be hoped for?
Well, first of all, thanks, Faye. It was always a pleasure to be on your show, and thanks to ET Now for giving me this opportunity to draw down a model portfolio for your viewers and, of course, investors. Beating Nifty is always something good that an analyst always feels about, and it's really taken a lot of pain to draw down this portfolio. Now, of course, like you rightly mentioned, whether I should book out of Mindtree or whether should I stay invested, because it has given me a fantastic set of returns. Well, my feeling is I'm not being greedy over here, to be very honest, but since the entire IT pack has been doing so well quarter on quarter, and we just saw the numbers for Mindtree for the second quarter, and they've done a stellar of a performance, and my belief is that the entire IT pack, including Mindtree, is definitely going to do much better going forward from here on. So as of now, I will be in no hurry to book out of Mindtree. Maybe at some little bit of higher levels, I would definitely think of booking at least part profits, but not currently.
Well, let's also talk about IRB Infra right now. Now, given the fact that the entire infra sector is struggling, this stock has lost about 35% in 11 months. Do you want to make any changes there?
My belief is that with the efforts by the government, the entire pack looks to be staging for a decent bit of more upside. And in terms of numbers also, there was not any great disappointment from IRB Infra. So I would just wait it out for a while, though it is creating a dent in my portfolio. But I will not be in a hurry to sell this one. Possibly you will see the stock give positive returns from the negatives.
All right, so hold on to that stock, and remember, this is a portfolio for a long-term investor, and that's what Gaurang is illustrating with this portfolio, that if you have faith in the fundamentals of the stock, then it makes sense to hold on to it. Now, remember, he started this portfolio for us in December last year, and every time he comes back on the show, he takes a look at it again, reviews it, and decides whether or not he wants to make any changes. If you'd like to write down this portfolio, I'm going to give you that list one more time. IndusInd Bank, Cipla, Godrej Consumer Products, Havells, M&M, Bocard, Mindtree, Apollo Hospitals, IRB Infra and Kane India. Now, the money has been moved uniformly across all of those 10 stocks, and like Gaurang was just telling us, it's beaten the Nifty quite handsomely, and we're going to be tracking that portfolio for you on a regular basis every time Gaurang is back at the studio. Now, time to focus on the markets this week. Let me bring in my colleague Ajay to give us an update on what happened on the Lal Street this week. Ajay, take us through it.
Well, Faye, markets have completely turned around, and after the Mahurat session making record highs, they have gone into a corrective phase. In fact, the benchmark indices have lost close to 3% this week, and we are witnessing a lot of fresh short positions accumulate at higher levels on Nifty as well as Bank Nifty. After a strong set of numbers from private sector and public sector banks so far, the banking stocks are witnessing correction at higher levels, which is one-fifth of the market capitalization not participating in the up move. Market is bound to come under pressure. Also, the Bank Nifty has gone below the 200-day moving average. Some of the red flags which are being cropped up in the market are the weakening rupee and rising bond yields. In fact, FII buying has also gone muted now. In fact, DIIs are selling for last 4 days. The DII are selling much more, or double the amount almost what FIIs are buying. So that is also a added pressure point for the market from here on. Some of the strategists say that going forward, it's the mid-cap side of the market which is outperforming. Mid-cap index is just 0.5% down or less than that. Small caps has gained this week, where overall markets have lost 3%. This outperformance for the mid-caps is actually a bullish sign. Also, the Q3 GDP data from US is calculated over lesser number of working days because of the shutdown, and hence should not be read into much. They are the bullish signs, but overall almost everybody on the street believes that going forward it will be the global cues which will be determining the direction of the market going forward, and benchmarks may continue to remain sideways for the time being. It's the mid-cap end of the market which will outperform, and that is the area where investors and traders should focus on, at least for the next a week or two kind of a focus.
All right, Ajay, thank you for those details. Well, Gaurang, I'm going to ask you a very straightforward question that a lot of viewers are asking right now. Now, we know that several retail investors stayed out of the market and missed that Diwali rally. They're feeling a little left out right now. Tell us how long it's going to be before we can expect the market to hit 21 again on the Sensex and possibly cross that number as well. What are you expecting?
First, a word of caution, and of course, in terms of advice, I think just because you've been left out of the rally from maybe sub 5,500, 5,400 to close to about 6,350 that we made on the Muhurat trading day, you should not jump into the market. I think that's going to be not an advisable thing to do. So just wait it out. Our belief is, and like we've seen in the past, history always repeats itself, they say, for the stock market. And that's what exactly has happened this time around. After making a new lifetime high, we have started to drag down a little bit. And not to forget, this rally was more driven by the liquidity from the FI side. And of course, the Q2 numbers from the corporate side has been a shade better than what the street was expecting. In this kind of a scenario, when your micros and your macros have not really changed much, I think it's not going to be prudent to jump into the market at this point of time. Sub 6,000 levels, I guess if we see those levels or closer to 6,000 on the Nifty spot, that's when it will be an appropriate time to possibly start nibbling into the stock market. And that too, my advice would be not to jump in with your 100% financial investment strength, but phase it out in a 25, 4 parts and then get invested, and possibly that investment further should be done at a correction but not in a rising market. So just wait it out, you will definitely get an opportunity, and market always gives you an opportunity to get invested.
Gaurang, we have a few questions that have come in during the week for you. Shanti has written in. She wants to know which of the following stocks make sense to buy for the long term at these levels. The choices are IDFC, South Indian Bank and Syntex. Of these three choices, which one would you recommend right now?
My advice would be to go with the South Indian Bank. As we all know, there has been a significant amount of change in the RBI after the new governor has come in, and I guess new bank licenses will be rolled out sooner than later. Foreign banks, there has been a significant amount of change in the guidelines, and they have given a green signal in principle, go ahead to set up subsidiaries or branches with priority sector lending. And my understanding is that if these foreign banks have to come in, they would possibly look at smaller regional banks to get acquired. And that's where some of these banks like South Indian Bank, like City Union Bank, like Dena Bank, like Syndicate Bank will be targets of takeover candidate. And even if I look minus this and I look at the financials of the bank, I think it is a decent bank. You could possibly hold out for a target of about 35 if you get invested from a 1 year plus time horizon.
We have another question from Ishan, who's written in. 150 shares of Tata Motors bought at 346 rupees. Should he hold on to that stock? Now, Tata Motors ended the week at 384. Very impressive Q2 earnings there. Are you impressed with what you're seeing on Tata Motors so far? And would you like him to hold on to that stock?
My advice would be to definitely hold on. And actually, the company Tata Motors has beat the street expectation and the polls that were given out. And I think it's a transformation process, when Tata Motors actually took over JLR, there are a lot of hue and cry and a lot of questions being thrown at whether it is going to be a wise decision or whether it is a fruitful acquisition that Tata Motors did of JLR. And look, today, from a lower-end car manufacturing company, Tata Motors actually evolved into a luxury segment with large part of their sales and revenues coming in from JLR. Of course, they are trying to concentrate and improve the performance of brand Tata Motors domestically as well as where they export. But JLR has turned out to be a big winner for Tata Motors in terms of acquisition. Hold on to it. You can look for a target of somewhere close to about 435. And if this run rate of performance continues, then there should be higher levels too.
All right, so hold on to Tata Motors. Coming up after the break, Gaurang Shah tells us why we should be buying Bharti Airtel and Tata Global Beverages at these levels. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Gaurang Shah is still with us, helping us figure out our long-term strategy when it comes to investing in stocks. Gaurang has brought us two recommendations right now that he thinks makes sense at this current level. The first of the two recommendations is Bharti Airtel. Well, Gaurang, this is a very interesting recommendation considering we've been talking about policy volatility in the telecom sector for so long. And then there's also the question of pricing power among that sector. Tell us why you think Bharti Airtel makes sense at this point.
Well, we as a brokerage house, Geojit BNP Paribas has been always positive on the telecom pack. Even in those days when things were looking down and out and there was a significant amount of correction that came in across the service providers in the telecom pack. But now that we've seen the pricing power come back, we've seen significant amount of clarity coming in from the authorities who regulate this particular sector, especially the TRAI recommendations thereafter, given the presence of Bharti Airtel in the domestic market and of course an acquisition via Zen in the African markets, which of course is creating a little bit of overheat on the balance sheet, but we believe that days are very near when this particular acquisition will start contributing to the balance sheet in a positive way. In the domestic market, 2G was passed, 3G is happening. The next thing that is going to be a revolutionary one is going to be the 4G. Voice-based revenues are definitely justified where they are, but when the next part of the revenue is going to come in from voice, other than voices, broadband and data, that's where we are quite optimistic. And with the kind of presence subscriber base that Bharti has, we believe that this is one of the top performing stock along with Idea Cellular that will do very, very well. So fundamentally we remain positive, and our belief is that telecom will definitely come back to at least significant levels, if not what it was a couple of years back, at least halfway through. We believe that performance will be visible. And of course, subscriber base is always growing in India. So we are working with a target of 420 from a 12 to 16 months time horizon. And I guess it is a turnaround for telecom service providers, cellular service telecom providers.
All right, so that was Bharti Airtel. Now, the second stock that Gaurang has brought us this week is Tata Global Beverages. Gaurang, take us through why this stock makes your list and what your targets are right now.
Well, firstly, on the target, 210, time horizon 12 to 16 months plus. Again, that's a fundamental call. As a disclosure, we do have positive coverage on both these stocks. We have recommended this to our clients. Consumption of tea always robust because of the climate change. There is going to be scarcity of tea leaves. This again augurs well for Tata Global Beverages because it is not only present in the domestic market, but it has presence in the overseas market, has acquired overseas brand. Starbucks are doing very, very well, and there are plans to roll out more stores for Starbucks. Tailwind of foreign currency revenues coming in because of their presence in the overseas market. And I think the balance sheet also speaks quite strong. Quarter on quarter, year on year, there's been a decent amount of improvement, and we believe that this improvement is going to be turning out to be a significant one. And in terms of buying the stock, I think it's trading close to about 155, 160. Again, like I mentioned earlier, if somebody is not having too much of a risk appetite, buy some at current levels. Lower end, maybe 135, 140 is a very strong base for this particular stock. You can accumulate even at those levels. And if things go well, then definitely you can look for a target of 200, 210.
All right, I'm going to give you a quick recap of the two stocks that Gaurang recommends for us this week. He said Bharti Airtel with a target of 420 and Tata Global Beverages with a target of 210. Let's move on to a few more questions. Vimal has written in 140 shares of BHEL bought at 240 rupees. He wants to know if he should hold on to that stock. Now, the stock ended the week at 135. Very disappointing numbers from BHEL this week. In fact, let me bring in Ajay, who will give us an update of what happened with those numbers and what's going on with that stock. Ajay.
Well, BHEL declared a very abysmal numbers for the second quarter, which was on expected lines. The traders were expecting weak set of numbers, and that's what they have delivered. But ABB also came on and reported a weak set of numbers, which soured the sentiment for capital goods. But otherwise, if you look and talk to traders, ever since L&T has come out and given a very strong guidance, the approach towards capital goods sector has completely changed. So if you keep BHEL aside, the sentiment is not so negative for capital goods sector after the second quarter numbers, because most of the analysts believe that from here on the going will be improving, however gradual it might be for this sector, and hence the sector merits a closer look on the fundamentals and technicals going forward.
All right, Ajay, thank you for those details. Gaurang, so many retail investors holding BHEL at this point and not knowing when to get out. What's your recommendation? Does it make sense to hold on to BHEL any longer? Are we in for further disappointments down the road?
I think the disappointment has been there for the last couple of quarters, Fair, and this is not the first time that these numbers have looked so pathetic, if I can use that word. Their order book is healthy, but what is the use of that order book if the cap good engineering company like BHEL is not able to execute or loses out on some of those orders which is there in the order book? Secondly, other income this time around was significantly higher. So if you minus that other income from the net profit, then your profit figure compared to the last quarter or year on year looks even more disappointing. Being a government PSU company, there is always an overhang about disinvestment coming up, and that disinvestment might happen at a huge discount compared to the CMP, etc., etc. So even if the investors want to hold on to those who have got invested at 200 or 200 plus levels, I think that life beyond 150, 175, I'm talking about the best case scenario for BHEL, looks very, very difficult. So whatever opportunity you get in terms of pullback, maybe close to 150 or 175, it would be an appropriate time to sell. And if you are a hardcore fan of cap good engineering sector, then the best pick is definitely going to be L&T. There again, we have a positive coverage. We are looking at a target of about 1050 on L&T, and that's been a decent performer when you compare BHEL and L&T.
All right, time for a very quick break. When we come back, we'll talk about the cement sector and find out if there's any value in there for you right now. Don't go anywhere. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. Gaurang Shah is still with us, helping us make money in the long term. Gaurang, thank you so much for staying with us this week. Well, Lakshmi Shah has written in, he has about 5% of his total portfolio in cement stocks. There's JK Cements, JK Lakshmi Cements and Ultratech Cement. He wants to know if he should reduce those stocks or maybe add another one. Now, first of all, do you recommend having 5% of a portfolio in cement? And if yes, which of these stocks should he be trusting his money to?
Well, I think if we are talking about firing up infrastructure, growth rate in terms of GDP getting fired up, concerned by government. Now, if you have a very, tight infrastructure environment, then GDP growth does not come. So if you have to invest more, you have to consume cement. Infrastructure definitely has a most important commodity, cement, which they use. So I believe that, it is reasonable enough to have a 5% allocation in this particular sector. But I'm only concerned with the stocks that he is holding. I think Ultratech is definitely justified to be in the portfolio. Others you can sell off, and if you buy ACC, then that would be much better. And in this case, I think you could possibly look at a decent higher level. For Ultratech, you can look for a target of about 2150. On ACC, you can look for a target of 1250.
All right, it's time for us to take a look at one more very quick viewer portfolio. Krishna Arjun has written in. He has the following shares in his portfolio. First on that list, Coal India bought at 233 rupees. Should he hold on to that stock?
Yeah, definitely hold on to it. But the only problem is it's a PSU stock. A lot of issues in terms of supply linkages, fuel linkages, etc., etc. But I guess it will evolve. And of course, coal is an important commodity. My target is about 330, but here you will need to have a little bit of more patience. And in time frame, I think I'm talking about at least 16 months plus time horizon.
He also has GSK Consumer, which he bought at 43.25. Hold on to that stock as well.
Stellar MNC company, cash rich, great numbers. 48.50 should be the target long term.
I'm going to take the next two stocks together. He has HDFC and IDBI Bank. Would you recommend holding on to both of them?
HDFC 950, 920, 950 target. He's got IDBI Bank. That's where I have a little bit of concern. My advice would be to switch to Yes Bank, wherein you can look for a target of 465. There have been concerns recently with the earlier RBI governor, when on July 16th there was a little bit of tweaks and changes in terms of overnight borrowing for the banks from the RBI, and of course there has been a courtroom battle between two groups. But I believe that's the thing of the past. The bank has been doing significantly well, and I think that this is a case for turnaround over here.
All right, last stock on his list, NMDC, which he bought at 118 rupees. Hold on to that stock as well.
I've given out Tata Global Beverages, fair, so I think you should make a switch over there.
All right, switch over to Tata Global Beverages. That brings us to the end of the show. Unfortunately, we've run out of time. Gaurang, thank you so much for spending time with us this weekend, and we look forward to having you back again very soon. If you have a question for Gaurang, write to us. Email ID is at the bottom of your screen. It'll be our pleasure to take your question on the show. You'll also find a copy of the show on our Facebook page, and you can reach me personally on Twitter. Thanks for watching.